Friends and investors, I'm here to show you exactly where Detroit is in its recovery and appreciation cycle right now in 2026. I'm going to show you and compare with a city in the US that has gone through a very, very similar cycle. And I'm going to prove to you why the beginning of this cycle is the one where serious investors want to be. And those who are prioritizing not only cash flow, but timing for the most appreciation want to be in this cycle, not the early one where there's the most risk and the most chaos, and not the final end of the cycle where all the juicy appreciation is gone and it's just steady returns. Right at the perfect time. This is the sweet spot. I'm going to prove it to you right now. Folks, take a look at this chart. This is going to tell you a lot about where we are. If you think about a city or a larger market's recovery and appreciation cycle from a bottom to a top, think about it like a baseball game. You know, we had the first and the second inning. That is where the most risk exists, where people are buying distressed homes for pennies on the dollar, but where the most risk, the most chaos, the most problems already exist. This is when blood is at its absolute highest on the street. And when you're looking in hindsight, that feels like the best time to buy. And on paper, it is. But for most human beings who have some emotions, some thoughts, they're dealing with family, work, jobs, and they have other risks and other responsibilities going on, it is the most difficult time to enter. So either way, that cycle has already happened in Detroit now, and we are now entering the best of the recovery on the proven cycle. Consider the late innings, the seventh, eighth, ninth inning of the game where things are getting tight. You can compare that to a place like Toronto, a place like Vancouver, a place like Miami, a place like Los Angeles. Prices are already high, cap rates are already compressed, the cash flow is thin, most of the high upside is already gone. Is it dependable? Yes. Can you get some returns and some cash flow? Yes. But the juiciest part of the returns are already finished there. The absolute sweet spot is at the beginning of that third and fourth inning. That's where the recovery of a city or a large market has already been proven. We have historical data looking back 4, 5, 6, 7 years that show actual data-backed recovery, that the city is invested in the recovery, appreciation is happening again, rents are rising, incomes are rising, population is rising, everything's on the positive. It's now a proven track, but it's still early enough that we can catch the juiciest spot of appreciation between that third and ninth inning. Folks, the investors I'm working with are entering right down here, the third, fourth inning. The recovery is proven, prices are rising, cash flow works extremely well. In fact, you can get a 1% rule in a lot of cases on a single family home. Financing readily available. The lenders trust the product. Management's already in place. And while there's still some risk, it's very manageable if you follow a proven system, which we have, and I will show you in person at our events and especially on our tour. Guys, let's be real. We want to look back here about 12 to 13 years to the year 2013. Detroit went through, I believe, the biggest city bankruptcy in US history. Like, that's not nothing. That's something to be weary about and to measure risk, which is why it's taken 10, 12, 13 years to recover to a point where we're now in that third or fourth inning, and there's a proven strategy. So currently in the recovery, Detroit is actually one of the fastest, if not the fastest appreciating US city. That was measured in 2024 and it's been top 3, top 5 in 2025 and probably will be the same in 2026. Now, normally I'm not looking to chase the highest appreciating city. What I'm after is the next 5 to 10 years. Where can I get in now in the third inning and ride this all the way to the seventh, eighth, ninth and get the juiciest appreciation, the juiciest returns with the absolute least amount of risk? Just take a look at the numbers. 2009, we're talking 50, 60, 70,000, but an absolute disaster and a high risk scenario in the vast majority of neighborhoods. And quickly things have stabilized. And while prices have averaged out in the 250 to 270 range, the kind of properties we're looking at are in that 120 to 180,000 range for single family homes in the B-class neighborhoods where you have solid tenant demand, quality properties we can turn over quickly, and the most desirable rent to price ratio we can get in the city while things are still appreciating. I would expect somewhere in the neighborhood of 5 to 10% for the foreseeable future in appreciation. Look, if you look at the numbers, the reality is Detroit is like Cleveland 5 years ago. I'm not saying Cleveland's good. I'm not saying Cleveland's bad. I'm saying they had their fallout and recovery started earlier than Detroit. So they're just ahead in that cycle. And the numbers prove it. Cleveland went through the same recovery cycle, same Rust Belt story, same trajectory. Investors got into Cleveland's third and fourth inning. They're buying properties 80, 100, 120,000 that are now easily worth around that 200,000 mark. They doubled their money. Okay. Now that doubling the money in that short amount of time, that window is now generally closed in Cleveland. Can you still get good returns? Yes, you can. I'm not saying anything bad about Cleveland, but the juiciest next recovery cycle is Detroit. Let's take a look at the comparison. You can see the recovery started 4 or 5 years earlier. Bottom prices around the same. Today's prices about the same. You can see the similarities. Cleveland started 4 or 5 years earlier, started at really low pricing. The average pricing's about the same now. The appreciation from the absolute bottom has been nearly the same. The growth is nearly the same. But the entry points now in the better neighborhoods in Cleveland are compressed, while they're still very, very accessible in Detroit. And we know because we've been there and we're doing the research. The cash flow position is actually tightening while Detroit is still strong and actually improving. Cleveland is 3 to 4 innings ahead of us. Okay. While there's still some runway left, we have way more in Detroit. So if you're an investor looking to double your money while still cash flowing, the most prime market is that Detroit market. Believe me, if the Cleveland investors could go back in time and watch and do what they did again in Cleveland, they would. And the smart ones are now going to Detroit. And the growth that Cleveland has had in recent years is because a lot of it is because Cleveland has become a popular destination for that cash flow investor. Detroit is still relatively unknown, although it's starting to grow. So this is when you want to get in. Now, I'm not going to sit here and list off every major investment that's happened in the city. I've just highlighted a few. Hundreds of millions, billions of dollars are happening in investment, from some major players in the Detroit market. And the evidence is real. You don't have to believe me. You can check the data yourself, but you can drive through the city and actually see it for yourself. If you're going to invest money there, I suggest a weekend, maybe even a week in the city, back and forth a few times. Check it out. You'll see that it's actually real with your own eyes. You can touch it and feel it. But most important is population, because without people coming back to the city, the recovery isn't going to happen, right? Right now, the population is stabilizing and slowly starting to increase after decades of decline. People are recognizing that turn, and you want to get in right before that population increase starts happening, because the demand will increase, but the supply of homes can't catch up. We can renovate as many as we can, but not many new homes are added. Once they start adding new homes, that trend will be solidly in the fifth, sixth, seventh inning. So this is when you want to get in. As a side note, just so you don't think I'm totally full of crap, I've put in some actual real life examples with the addresses, which I'm probably not supposed to do, to show you that this is a real thing. You can look it up, back it up, double check me all you want. These are real numbers. For Canadians, a house on Yonge Street. We saw this property in person, 3 bed, 1 bath, a purchase price of 125,000, a 30% down payment, yes, in US dollars, of just about 37,500, monthly rent averaged out at 1,350, and you're looking at a cash flow around the 400, maybe $500 mark, depending where the maintenance and interest rates come in. Okay, leverage, meaning with a mortgage, you're talking about easy returns of 10 to 13%, just cash on cash, not factoring in appreciation or mortgage paydown. I'm not even counting those. Okay, same idea. Haverhill, slightly more expensive, and $8,000 more in down payment, slightly more rent, similar return. Apple same idea, slightly more expensive, a 10% return. And look at this. We're not even going to talk about this, But because of the lack of housing and lack of hotels, even though they've renovated so many of them, there's an incredible opportunity for Airbnbs. Now, while they're more expensive, of course, and require more down payment, the income potential is tremendous. You're talking 2 to 3,000 a month easily for some of these Airbnbs, and we have the actual Airbnb data numbers to back it up, prove it. I want anyone to call me out on this. We have the data. Guys, don't believe anything I tell you. We're going to host a Zoom call with our partners on the ground in Detroit. They're going to show you the hundreds of properties that they've done and helped investors buy. We're going to show you all the properties we worked with. We are an open book. There's nothing to hide. And then we're going to have a live tour. The deadline to register for the tour is May 27th at 5 p.m. We can only take 8 to 10 people, max. We're not doing any more. We're not doing 30 people. That's crazy. Not going to happen. The tour will happen on Sunday, May 31st. You're welcome to drive in the night before, spend Saturday night in the city, check it out if you want, or drive in Sunday morning from Ontario. It's 3, 4 hours away, depending on where you are. And come in, enjoy the morning and the afternoon, and then drive home at night. There's no cost to attend, but you must be known to us. Okay? So to register, I'm going to have a link below in the description. If you want, you can email me directly and we will call you, get to know you if we don't already know you or don't already know you, and we'll give you all the details if you want to join in. We're going to have a Zoom call beforehand just to introduce everything and everyone. So stay tuned for that. But if you are interested, you must be on my email list or at least email me to get to know me. All the details in the description. Talk soon.